Good morning from our global headquarters in New York. I'm Manus Graney. You're welcome to Bloomberg Brief. Let's set that agenda. It is déjà vu for President-elect Trump vows sweeping tariffs to hit Canada, Mexico, and China with additional levies. The dollar strengthens, stock futures drop. Losing interest for now, Qualcomm cools on a potential takeover of Intel. More on the Bloomberg Scoop coming up. And Minneapolis Fed President Neel Kashkari says it's reasonable to weigh another rate cut in December. The latest Fed minutes and consumer confidence on deck today. Good morning. So it is déjà vu in the land of foreign exchange. The dollar on seats a move. You've got Canada. It touched a four-year low in the overnight. The peso back near the lows of 2022. Now, these drops in the Canada and the peso are nowhere near what you saw on the night of the election. The peso crashed by 3.5% and undid that. What is at stake here? Additional tariffs, 10% on China, 25% on all products from Mexico and Canada. This is a politically motivated tariff rather than a deficit-motivated tariff. More on that with our trade czar in just a moment. Where is it hitting hardest? Not so much U.S. stocks, more so on the European complex. The Russell gives back 0.5%. We're flat on the S&P 500. David Costin over at Goldman Sachs says, keep your money in U.S. stocks. The likes of GM and Ford are under pressure. GM down 2%, Ford down 1.4% in terms of the pre-markets. Some other flow for you is in the bond market as well. We have a little bit of an unseating of the Besant bounce yesterday, so we're seeing yields ride ever so slightly. Some breaking news coming through for you from Intel. This is on securing additional funding of $7.9 billion in U.S. chip subsidy for advanced factories. Now, of course, we've got the story today that Qualcomm is going cold on the idea of perhaps taking out Intel in a deal. That was a much talked about and speculated possibility. But this morning, the breaking news is that Intel secures additional $7.9 billion funding for U.S. chip plant construction. OK, we'll keep an eye on that as we go through the morning. Well, as I said, President-elect Donald Trump, he has brought tariffs back to the fore for the first time since he won the election. Trump took to his website, Truth Social, yesterday to vow on imposing tariffs on Canada and Mexico and raising them on China. Here to tell us what those levies might mean for global trade, it is our trade czar, Brendan Murray. Brendan, it's interesting. This is about political promises made on the campaign. That's the narrative for these tariffs rather than deficits in the first salvo.
Yeah, exactly. So this was a stark reminder that the incoming president, will use the threat of tariffs for just about anything he wants to accomplish on the international stage. In this case, he's pointing the 10% tariffs of China, the 25% at Mexico and Canada, because he wants them to crack down on the drug shipment problem and the immigration issue. So these are obviously key campaign issues that he wants to make a loud statement about. They're just threats at this stage. But he has made no bones about the fact that he has the authority come January 20th when he's sworn in to put tariffs on unilaterally without any approval from Congress or anybody else on even our biggest trade partners, those three countries.
Look, I think it's one of those situations where it's sort of like shoot first, deliver on the political messages. But it got Justin Trudeau on the telephone. It got responses immediately from the senior leadership within the Canadian government because their trade relationship with the United States of America is quite literally gargantuan relative to their European and indeed global peers.
Oh, absolutely. That is one of the main goals of threats like these is to spur conversations, negotiations, and to strike a little bit of fear in the opposition. You can imagine in Brussels today they're going, okay, what does Trump have on us that we're going to have to, and how are we going to respond when he posts something on social media about the European Union? So the impact of this goes well beyond North America and China. Countries around the world that have imbalances with the U.S., which have industries that they're protecting against the U.S., are going to take notice.
And the response mechanism, I mean, there's a much more formal response mechanism from Canada. As I say, Justin Trudeau, the Prime Minister there, on a call, we understand, with President-elect Trump. China playing this free trade narrative that they do like to fly from time to time. But what has their response been so far?
Well, we just got a statement from the Chinese government, so we'll have to parse that a bit before we know. But generally, the Chinese response is very cautious, very slow, and very deliberative. So we wouldn't expect them to come back immediately with specific tariff level threats. But they would take a more measured approach. Perhaps get President-elect Trump on the phone and talk through about what exactly he meant and how they can address some of the concerns he has without sparking an all-out trade war between the world's two largest economies.
Brendan, thank you very much. Great recap. Brendan Murray there on the headlines overnight on trade and tariffs. Joining me now is Maria Waitman, senior multi-asset strategist over at State Street. Maria, it is deja vu. You can see the stoicism, really, of the U.S. equity market relative to the nervousness in Europe. So we're going to go into this particularly volatile period of time. How do you prepare for this? You're seeing the first narrative of tariffs too.
Good morning, everyone. I think it's really interesting that, what your correspondent just said, I think that kind of fits with kind of our interpretation as well, is that, so far tariffs are a tool, a negotiating tool to get other countries to do what Donald Trump wants them to do. And, the first one was on kind of drug trade, really important for his voters. And the reaction market is like not terribly concerned about it yet. It seemed to be like, okay, we are in this negotiation, quid pro quo kind of thing. Interestingly, reaction of U.S. stocks. U.S. stocks don't seem to worry too much, and particularly my favorite, like technology stocks. And Nasdaq futures are higher than like small caps and broader indices. So that's encouraging. So market is saying, okay, we are negotiating. See what kind of president-elect can get out of other countries.
And this goes back to, we had this Besant bounce yesterday, really both in terms of the dollar, in terms of the rates market, etc. But let's just hone in on your favorite. Your barbell is cash and big tech. I know that. We know that well. When you see Tim Cook in China for the third time this year, and he talks about the supply chain, and he says, I value them highly. We could not do without them. He's on the wrong side of the narrative here for the ensuing tariff war. But who has the strongest moat in regards to tariff in big tech, in your opinion?
I think that's a really important point. And like the big story about tech was moats around the business, who can compete, and it's very difficult. Barriers to entry are enormous. And I guess if we are specifically worried about tariffs, production, quid pro quo, I think things like semiconductors probably stand potentially kind of attractive. Nobody wants to see like shortage of chips. We saw that during COVID. That was not pretty for anyone. Software and another area where kind of potentially maybe there is like some softness and maybe less risk. So maybe hardware a little bit could be caught in a kind of a pawn in this tariff trade war game. But arguably, again, those businesses are extremely important for United States. They're very important for China, other Asian producers. So I personally struggle to see that being like on a really kind of damaged by that rhetoric.
Okay, so that sort of creates pockets and pools of opportunity for you. Every note that we've had in our inbox is talking about 6,600, 6,500, 6,600, maybe even by the middle of next year. Euphoria in credit. Are you in a euphoric state of bullishness?
I wouldn't probably go to the euphoric state of bullishness. Like you mentioned, like my barbell is tech and cash. So I am worried about kind of weaker points and cracks in kind of U.S. economy, global economy, kind of manufacturing side, smaller companies. I'm very skeptical about small cap trade. So those areas that are still challenging. We have monetary policy is still tight, and kind of rate cutting expectations have been scaled down quite a lot. So those areas that are struggling with kind of economic slowdown, they're in trouble. I just love tech, and that should support kind of overall equity market. But I very much doubt that the rally can broaden very much from what we've had this year.
So you doubt then the veracity of the rally in the Russell 2000. I mean, it's what, up 6 days in a row. It's put on 6%. It's been tempered a little bit. So you're still not tempted to diversify away from mega tech?
No, not at all. And actually, I mean, I would probably fade small cap trade. I mean, to me, that's potentially risky. I see kind of euphoric, I see kind of very optimistic sentiment that, okay, we are doing this like America first rhetoric and we're going to support American business. That is great, but it needs to happen. I think what we're seeing right now, and I mean, that's the chart I keep showing my clients, is that proportion of small cap companies that are loss making are very close to recessionary levels. We're close to like a quarter of the small cap companies.
So perhaps this is losing money. Maybe this is a misfounded or misplaced exuberance in small caps. Let's just square off with the Fed. Obviously, one camper talking about the plausibility of a pause and building that narrative. I listened to Neil Kashkari. It's still a reasonable consideration. He's talking about a December rate cut. How important is it, Maria, that we see these yields are capped out and these rate cuts keep coming? Maybe not at the same pace, so shallower and less, but that they do continue.
Yeah, no, I think this is really important, and that's kind of the threats I'm kind of very concerned, the cracks in the kind of under the surface. So, like as I said, small cap companies, a lower income consumer, more like manufacturing centric production. That's where the challenges are. And those are not huge part of the US economy, so they're not really kind of coming up in aggregates very much, but the pressure is there, and kind of if we start kind of having this narrative that we're not having cuts and we need to worry about maybe even higher interest rate, that would be a real problem. And I suspect those problematic areas will kind of grow and spread, and that creates problems.
Maria, thank you very much for being with us this morning. First reaction to the prospect of renewed tariffs around the world. Maria Waitman there of State Street. Other stories trending on your Bloomberg terminal. This is what I've got for you this morning. Ken Leach, the former co-CIO of Western Asset Management, was charged by the DOJ and the SEC with running a cherry-picking scheme where he inappropriately favoured some clients' accounts over others when allocating trades. Now, Leach's attorney disputed the government's case, saying it was unfounded and that his client acted properly at all times and would defend himself vigorously. Rivian received preliminary approval for $6.6 billion of a federal loan to support construction of its plant in Georgia. Now, the plans are to build the plant were halted earlier this year in a decision aimed at cutting costs. But the company still needs to meet certain conditions to finalize the loan. Walmart is cutting its DEI program, saying it no longer considers race and gender to boost diversity when granting supplier contracts, and will stop collecting demographic data when assessing financing eligibility. It is the most prominent company so far to pull back from diversity promises. Coming up in the show, Intel secures that $7.9 billion US CHIPS award. We'll dig into the narrative, and Aaron Cannon joins me from Clear Harbor Asset Management to talk about the year-end play in markets right here on Bloomberg. Good morning. Intel has secured $7.9 billion in the U.S. CHIPS award for advanced factories from the Biden administration. Tom McKenzie is with me now. So, Tom, $7.9 billion, it's a little bit less than we thought that they were going to go for. And in the words of Gina Raimondo, American-designed chips being manufactured and packaged by American workers in the United States of America. So this is a pretty important announcement for them, given the Qualcomm story. We'll come to that in a moment.
Yeah, absolutely. Look, and the way you phrase it and the comments from Gina Raimondo, really the focus on that American-made technology, which was the heart of the CHIPS Act, of course, that program of incentives and grants that was pushed through by the Biden administration. And to your point, the original number that we know Intel have been looking at was around $8.5 billion. The lines crossing the last few minutes suggesting they're going to get $7.9 billion. That's been confirmed, $7.9 billion in terms of grants. It would still be the largest single grant from that CHIPS Act, of course, by the Biden administration. that was a combination of grants and loans. $7.9 billion will be going to Intel, and as you rightly say, that is contingent on it following through, meeting certain targets in terms of the build-out of its factories and foundries in states like New Mexico, like Arizona, like Oregon, over a certain time frame. They are likely to receive the first $1 billion as soon as this year, we are told. Intel saying that in the long term, they plan to invest potentially around $100 billion in terms of building out its manufacturing capacity in the US over the long term. So there's been some wrangling over this in the last few months. They've got it over the line now. Positive going forward for Intel in terms of being able to build out those factories at a time, of course, when it faces multiple challenges, as we saw from the most recent earnings report and the job cuts that have to come through. They've had to convince Washington. They have to convince investors now.
It's going to be interesting to see how this evolves in the next Trump administration, because, of course, the accusations from President-elect about Taiwan, stealing the chips business. So a lot of stimulus has been delivered. But let's talk a little bit about Qualcomm, because we've learned, Bloomberg, it's a scoop for us, is that Qualcomm is losing interest in the potential takeover deal for Intel. Here's what the CEOs had to say on a possible deal earlier to Bloomberg.
Obviously, there's been rumors and churn in the industry, and I think all of that just indicates how important Intel is to the industry structure and semiconductors, and how important those supply chains are.
Right now, at this point, we have not identified any large acquisition that is necessary for us to execute on this $22 billion. And we're super focused on executing on the $22 billion in the next 5 years.
So, Tom, it looks like, Qualcomm has gone cold, but I love the line in the story, which is it could rekindle its interest a little bit later and come back for pieces. Of course, this is going to be so important in terms of what kind of regulatory regime we get under Trump 2.
Absolutely. And look, it could come back in a different form. As you say, it could come back if the environment, particularly around the regulatory framework, as you point to, changes, becomes more favourable, because that was one of the key sticking points. So going back to September, we know from our own reporting that they put out feelers, Qualcomm, around a prelim takeover of Intel. That was back in September after that terrible earnings report from Intel and the announcement of those job cuts and those weak forecasts. What we understand now is that on a number of fronts, three main fronts in terms of financial, operations and regulatory, those are the key headwinds. They would face an antitrust process, not just in the US, but also in their key market of China, where both Qualcomm and Intel have a lot of market share at stake. But also in terms of operations, Qualcomm doesn't operate its own foundry. So the chip making, the semiconductor making parts of the Intel business, that would be in a whole new endeavor. And then on the financial front, $50 billion of debt that Intel has that Qualcomm would have had to take on as a result of this potential deal. So you're right. They've called on it for now, according to reporting. They could come back for different pieces of the Intel pie. Maybe if the regulatory winds change, maybe they come back to looking at it in its totality. But those are the three key reasons why they have called, Qualcomm have called on this potential takeover.
But of course, President-elect Donald Trump has promised a regulatory onslaught on independent agencies like the FTC. Not quite sure what that means, but we will begin to understand that a little bit more clearly in 2025. Tom, thank you very much. Tom McKenzie there. Great reporting on Intel. What might these tariffs that are being speculated, an additional 10% on China, 25% on all products from Mexico and Canada mean? Well, think about the autos who are producing and passing product through from various parts of the world back here to the United States of America. GM down 2.3%. Ground zero for the reaction function this morning is the foreign exchange market and the auto industry. Good morning from New York. Bloomberg Brief. I'm Manus Cranny here in New York. Front pages look a little bit like this. Headlines from around the world. Kicking it off with the New York Times. Special counsel Jack Smith asked two separate courts to drop the cases against President-elect Trump. Within hours, one of the cases was dismissed. Smith said that the move was a necessity because of the DOJ's policy that it is unconstitutional to prosecute sitting presidents. Next up, the Financial Times says Citigroup is reducing the number of year-end promotions. Managers have been told that as many as 2,000 Citi employees will get a bump in their pay and their title. Citi said it made group-wide promotions and other role changes earlier this year. And the Associated Press leads with Formula One, saying that it will add GM's Cadillac brand to the American team in 2026. It will be called Cadillac F1, and it'll be run by the new Andretti global majority owners Dan Tauris and Mark Walter. The team will use Ferrari engines for the first 2 years until GM and Cadillac engine get into the cars. So that's a little bit of news for you on the old F1 front. And actually, Walters, he's the CEO of Guggenheim Partners. He's got controlling interest in the World Series champion LA Dodgers and Premier League, of course, at home, Chelsea. I'll leave you with a snapshot of what the salvo from Donald Trump last night has been in regards to tariffs on the Canadian dollar and on the peso. That's where you're seeing the most reaction function, where the dollar is up, the peso is down by 1 1/8%. We'll give you context on Brief in just a moment. From our global headquarters in New York, you're welcome to Bloomberg Brief. I'm Manish Craney. Let's set that agenda. It's déjà vu. President-elect Trump vows sweeping tariffs hit Canada, Mexico and China with additional levies. The dollar strengthens, stock futures drop. Losing interest for now, Qualcomm cools on a potential takeover of Intel. More on the Bloomberg scoop coming up. And Minneapolis Fed President Neel Kashkari says it's reasonable to weigh another rate cut for December. The latest Fed minutes and consumer confidence on deck today. Ground zero for reaction to the prospect of tariffs on Canada, Mexico and China, as these currencies are ground zero for the reaction. Now, look, the Canadian dollar made it to a 4-year low, but nowhere near as brutal a sell-off as we saw in the very first reaction to Trump's election, President-elect Trump's election. The peso back towards 2022 lows. Just bear in mind, overnight on election night, that crashed by 3.5%. The dollar was up by 3.5% at one juncture. In terms of the other narrative out there, just roll it over and have a look at stocks. Minimal reaction in the United States. We're just dipping ever so slightly into the red. It is in Europe where there's perhaps a much more egregious reaction. They're waiting to hear what might be coming down the pike for them. I want to bring you a little bit of breaking news now. This is from the Biden administration proposing the following: that Medicare and Medicaid coverage obesity drugs. Just think of the names that this is going to impact. Lilly and Novo Nordisk would benefit as the supply shortages ease. The proposed rules, I suppose, a challenge for the incoming administration. So this is about access. You can think in terms of the numbers. Nearly 7.4 million. How does that break down? 3.4 million older Americans on Medicare. You've got 4 million on Medicaid. So this is, I know that the Congressional Budget Office did some analysis that would possibly cost $35 billion over 9 years. Eli Lilly up 2% in the first sweep on this. So a significant announcement from the Biden administration proposing Medicare and Medicaid coverage of obesity drugs. Well, President-elect Donald Trump had been quiet on his self-professed favorite word, tariffs, until yesterday. For the first time since he won the election, Trump took to his website, Truth Social, to vow imposing tariffs on Canada and Mexico and raising them on China. Let's dig into this. Context Matters. We have our senior editor for tech and strategic industries, Mike Shepard from Washington. Mike, in the very first reaction to this, one can see that these are politically driven tariffs rather than the fiscal narrative that suited and shrouded the first Trump administration. This is politics, not deficits.
Yes, that's right. I'm glad you brought that up, Manis, because we are seeing a distinction with how Trump is intending to use tariffs this time around in his administration. He wasn't kidding when he said he really sees tariffs as his favorite word or his preferred policy tool. You'll remember back to that interview he did with Joe Rogan before the election when asked about the semiconductor investments in the U.S. that the Biden administration has been pursuing. He said, well, you could achieve the same results with tariffs, ignoring, of course, altogether the complexities in the semiconductor supply chain. But again, with respect to immigration, with respect to the desire to curb the flow of fentanyl into the U.S., he is seeing tariffs as a vehicle to pressuring U.S. trading partners. Mexico is the largest U.S. trading partner, Canada number 2, China number 3, to get them to enact measures that would address these problems that he identified and that his voters had identified as well during the campaign.
And I think that's the essence of this. This is about illegal immigration. This is about fentanyl. This is about the supply chain of fentanyl, and very much laying down a marker of this is what I promised on the campaign trail, and this is what I'm going to deliver on day one. It evoked immediate responses, didn't it, Shep? You've got the Canadian government. You've got various senior voices there talking about what they've done and their trade relationships. And it got Justin Trudeau on the phone immediately, didn't it?
It did. It was within minutes or hours after the Truth Social post and the headlines hit that Justin Trudeau got on the phone with the president-elect. He wanted to make sure that Trump knew that along the northern border, there is a minuscule amount of illegal migration into the U.S. when compared to the southern U.S. border with Mexico. And he also wanted to stress that, look, Canadian law enforcement has been cooperating with its U.S. counterparts on the question of illegal drugs specifically. So they will continue this conversation. Justin Trudeau has dealt with Donald Trump before. We have not heard from the Mexican government yet. New President Claudia Sheinbaum is probably assessing right now how to come out tomorrow, especially since Mexico has been such a favorite target of Trump during his 4 years in office, in his run-up during his first campaign, and of course during the most recent campaign. China, for its part, warned that there is a risk in any kind of trade war economically. And they also made the point that, look, we're not going to discuss this right now. And in a sense, that acknowledges that from Trump at this moment, he's not even elected. He's not even inaugurated yet. This is not a fully formed policy, and he would need to actually take some steps even to enact it on the first day. So there may be some room for negotiation and discussion, too, as Justin Trudeau tried to open last night.
Okay. Shep, thank you very much. Great context there. That is Mike Shepherd there. A little bit of breaking news for you now on Axios. This is what they're reporting, that Trump is mulling naming an AI czar in the White House. As I say, it's according to Axios. The czar would coordinate federal policy and government use of AI. Why does it matter? Well, you just think about Elon Musk. He won't be the AI czar, but he's expected to certainly get involved immediately in shaping that AI policy. He has been there pretty permanently since the start of President-elect's new tenure, seeing people come in and go out. A lot of people talking about perhaps conflicts of interest there, but that's a little bit of breaking news from Axios. My guest this morning is Aaron Cannon, CEO and co-founder of Clear Harbor Asset Management. Where to start? Good morning. Good to see you, Aaron. So here we are. We now have some understanding of the political motivations for these tariffs on Canada, Mexico and China. This is just the initial salvo of disruption to come, isn't it?
Well, it very well may be, but it shouldn't be a huge surprise to Michael's, your previous guest's point. Trump has used tariffs before. We anticipate that he will use them again, and he said he would, and so he's doing that. But I do think it's important and to think that this is just politics, because there is a policy prerogative here. He did campaign on reducing the illegal trafficking of drugs, and particularly fentanyl, which is killing tens of thousands of young Americans and adults in the country, and the origin of which is China. And so the largest tariff that he announced was China, and of course the northern and southern border is where these drugs do flow, and particularly our southern border. And so this isn't a surprise in some important sense.
Well, look, the very immediate reaction function is in the foreign exchange market. Do you still believe in the power of Scott Bessent to be the adult in the room?
I think so. You know, he supports deregulation and the concept of fiscal discipline, bringing our deficit to GDP down from, call it 8% annualized over the last couple of years, which is totally unsustainable, to at least 3% by 2028. That's part of sort of the initiative that he believes in. I think this sort of feeds into the narrative that is probably somewhat accurate. Just we're going to see deregulation going forward in the Trump administration. And with deregulation, we're probably going to see a rise in mergers and acquisition activity across multiple sectors of the economy, Manus, particularly those that are probably not or haven't been the beneficiaries of this upward rise in the stock market, which has been heavily driven by mega cap tech. And so we could see financials, asset managers really serve as beneficiaries to this deregulatory trend that Scott Bessent embraces and Trump certainly embraced on the campaign trail. It could also impact other sectors like industrials and even healthcare. And those are, you know, when you take a look at the top three sectors in the Russell 2000 index, for example, those are the top three sectors. And those are not the sectors that have driven the market higher over the last couple of years.
It's interesting. We've got this breaking news this morning on the healthcare stocks from the Biden administration, perhaps empowering Medicare and Medicaid patients for obesity drugs. I mean, this is what you would expect in the closing period of an administration, trying to execute policy which can have a material impact. The drug stocks are rallying this morning. As you look into 2025, you know, how do you look at that sector?
Yeah, it's sort of interesting. I think clearly healthcare is made up of, you know, so many different components, the hardware side and in the biotech side. I mean, we talk about artificial intelligence, and clearly it's having a nice, we think it'll have a nice tailwind to the ability for research and development to accelerate so that drugs that are in sort of phase 1 and 2 can move through that process and become more commercialized more quickly. And so we think that, you know, that's certainly going to be a trend going forward, regardless of who's in the White House. And frankly, you know, artificial intelligence is playing an important role beyond healthcare and things like utilities and the demand for electricity. And also we're seeing, you know, data companies that we always thought as sort of like asset management companies, like, for example, BlackRock, is becoming a massive data aggregator. And so the world's changing, and we're, you know, analyzing those shifts as we move into 2025, Manus.
Do you have animal spirits? Do you have unbounded optimism? Do you know, where are you in terms of the scale of exuberance?
Well, I think our optimism comes from the reality that ingenuity is the driver of so much economic opportunity and social mobility around the world, and particularly has been on full display here in the United States. And so when we think about constructing portfolios for clients, Manus, we still think the equity asset class will continue to perform very well, public equities and private equities. In fact, if you look at the public equity market, since the 1990s, the number of public equities has collapsed. It's gone from like 8,000 to call it 4,000. We think there may be a little bit of a renaissance in the public equity market as private companies in this deregulated environment over the next couple of years maybe decide to actually enter the public domain again. And so, you know, we think that there's a lot of opportunity under the proverbial mega cap tech hood within the overall market. Multiples, when you look at the multiples outside of mega cap tech in the United States, they're trading at like 17 times instead of mega cap trading at 30 times. And so we still think there's a lot of opportunity there across sectors, not only sectors that are like high growth, technology and consumer discretionary, but also, again, industrials, financial, asset managers, parts of the utility complex, materials, and even some of the energy areas, and not just traditional energy, which Trump has embraced, but we think some of the sustainability names will continue to sputter until there's clarity, but that ultimately there will be a demand tailwind for some of those key areas of the economy.
Aaron, I'd like to round off with, yesterday was very much about the Scott Bessent boom. The bond market yields dropped aggressively. There was a reaction in the dollar and quasi in equities. But when we talk about a fiscal hawk who wants to get a deficit to 3%, co-joined with Doge, how attainable, how deliverable is that 3% deficit by 2028? Because some people would say, well, look, you chose to have deficits at 6.5% during COVID. So how deliverable is that deficit hawk narrative?
Well, it's sort of a dilemma when you think about it for the administration, because if Doge is successful and they're able to cut, as Musk mentioned, $2 trillion a year from the budget, if you sort of look back at the last 3-4 years coming out of the start of COVID and the massive deficit spending, the Inflation Reduction Act, the so-called Inflation Reduction Act, and the CHIPS Act, that was about $1 trillion of spending. Some economists would argue that a third of our GDP growth over this period has come from unsustainable government spending.
Yeah.
And so could it be possible that we have a successful Doge implementation that actually dampens our growth prospects going forward? I think in the long term, we need sustainability. And so this is important because we can't run 8% fiscal deficits as far as the eye can see. That's
certainly not in perpetuity. Those bond vigilantes may well indeed make hay in 2025 if we continue on that road. Aaron, thank you very much. Aaron Cannon there of Clear Harbor Asset Management, reacting to the breaking news on Bloomberg. It is your Bloomberg Brief. I'm Manus Cranny in New York. Good morning to you. The headlines that dropped on the terminal a little bit earlier. The Biden administration is proposing Medicare and Medicaid coverage for obesity drugs. Novo Nordisk and Eli Lilly jumping on the back of the news. Our Bloomberg Intelligence senior pharmaceutical analyst Sam Fazeli joins me now. Sam, this is one heck of a bill that they're going to leave the Trump administration, $35 billion over 9 years. Let's break this down first of all. This is expanding GLPs pretty much for everybody who wants to get their hands on them. Supply side, first of all, Eli Lilly and Novo Nordisk, they are the producers of these. Have they got the capacity to meet this kind of a promise?
Yeah, so Manus, good morning to you. What we see here is not an enormous increase in the potential target market, if you think about it. 35 billion, we estimate that's about 25% of the population that could benefit from an obesity drug, so 25%. That's not an enormous lift. And remember, this 35 billion is over 9 years, so it probably means a lower amount to start off with, and therefore it ramping up. I'm pretty sure they can catch up with the manufacturing as time goes on. And also you could do the maths, man, as 35, let's say, evenly divided by 9 billion. What does that mean for the revenues of the companies, right?
Okay, so perhaps not just as gargantuan on the headline. Talk to me about, it's a political issue as well as a health issue. And so the first question that you and I should talk about is the possibility of President-elect Donald Trump and his team, RFK Jr., perhaps reversing this, RFK Jr. being, of course, at the Health and Human Services, or HHS.
Right. So the reason I think this is important to bear in mind is that RFK Jr. has been very clear about his views on the healthy eating, the type of food people have access to. He's against fast food and additives, etc. But in the meantime, I think he said that people should lose weight with healthy diets. Now, there's been plenty of studies that have shown that's just not good enough. Remember that a lot of these trials where they show a benefit for weight loss for these drugs, Wegovy, Ozempic, Zepbound, is against a background where patients are on a calorie-controlled diet. So it doesn't work. Nevertheless, I think he's skeptical of these drugs, and therefore there is an interesting possibility setting up that once they're in charge, they might reverse this.
Okay, well, we'll certainly keep an eye on. For now, those stocks are bid this morning. Sam, thank you so much. Sam Fazeli there of Bloomberg Intelligence. Let's pivot to tech. The Biden administration finalizing a deal to give almost $8 billion in federal grants to Intel. That is the largest direct subsidy from a program to boost domestic chip manufacturing. Tom, good to see you this morning. So it's a big number, but it's less than what was proposed, and it's certainly not even as much as was on the table for them. Why the restraint?
Well, one part of it is that Intel will not be taking loans that were offered to them. They'll take the grant at a lower level, not the 8.5 billion US dollars that had been flagged earlier in the year, but 7.9 billion. And they're not going to be taking the additional loans that had been offered to them. We don't know why they're not taking the loans. The reason they're taking 7.9 billion or being allocated 7.9 billion instead of 8.5 is apparently because they received an additional 3 billion US dollars from the Pentagon earlier this year. So they've had a bit of extra juice pumped into the system as a result of that. In terms of the grant coming through, look, the CHIPS Act, 110 billion in terms of grants and loans in total. So this is the biggest allocation. It's going to help them build out their factories, particularly in Arizona, New Mexico and Oregon. They're going to receive probably the first 1 billion this year because they've already achieved some of the targets that are set for them. And as those targets are achieved across the next few years, they will receive more of this allocated funding, 7.9 billion. Ultimately, Intel says they're going to be spending and investing about 100 billion US dollars to build out foundries, manufacturing plants for semiconductors in the US in the longer term.
So talk to me about Qualcomm. Obviously, Intel and Qualcomm, we've had this story running for a while. This is a Bloomberg scoop. It is that Qualcomm going cold on Intel for now.
Yeah, for three key reasons. One is financial. Intel has about $50 billion US dollars worth of debt, which Qualcomm would have to take on if they took over the company in its totality. The other, importantly, is the regulatory environment, particularly the expected antitrust review and in the market of China. They'd have to have an antitrust review in China as well, key markets for both Intel and Qualcomm. And then the operational piece as well, that would also be very complicated for Qualcomm if they were to go ahead with this takeover, which is running Intel's foundries, the manufacturing piece of the business for those semiconductors, not something that Qualcomm does now, so they have to relearn that. That's why, according to the reporting, they're going cold on this potential deal, but importantly, say they could come back for pieces of Intel at a later stage, or maybe even revisit it. But for now, they are cooling on this prospect.
Tom, great reporting. Tom McKenzie there on the latest on tech, right here from New York. Good morning.
To me, the most beautiful word in the dictionary is tariff, and it's my favorite word. It needs a public relations firm to help it, but to me, it's the most beautiful word. We're going to have thousands of companies coming into this country. We're going to grow it like it's never grown before, and we're going to protect them when they come in because we're not going to have somebody undercut them.
President-elect Donald Trump there speaking to Bloomberg before the election about his favourite word dominating the news flow today. It is the word tariff. Ground zeros in the FX market. Is it a negotiating tool, or will he actually implement that size and scale on day one? Here's what you need to know for the rest of your trading day. Economic data, new home sales, consumer confidence at 10 a.m. Plus then we get the Fed minutes at 2 p.m. People will parse those for anything that shifts towards the possibility of a pause. Of course, Kashkari intimating otherwise. Dell and HP, those earnings come out after the market close. So we'll run you through those tomorrow. Here's how the markets are moving in reaction to that word tariff. The potential risk from President-elect, talking about Canada, talking about China and Mexico. It is the autos that you're seeing perhaps some of the biggest impact, and you just think of the kind of imports like Ford. They bring in the Ford Fiesta, the Ford Fusion, etc. from Mexico. The surveillance team will pick up the risk in just a moment.